So how are the financial markets making you feel this week? Hey, it's Adrian here from Enlightened Stock Trading. As I record this video, we've had a week of extreme volatility, all sorts of craziness, and a whole lot of uncertainty in the financial markets. So I just thought I'd record this video and give you a bit of a debrief on what's going on and what you can do about it to make sure that your trading doesn't suffer in the future when we have weeks like this. And we will have more weeks like this because there's nothing more certain than the markets are uncertain. And volatile markets become quiet markets, and quiet markets become volatile markets. And so we need to be prepared for all the crazy things that are going on in the financial world for you to trade consistently and profitably. So first of all, let's have a look at what's going on in the market this week. As I'm recording this video, now you may be watching this later, but this is still a perfect illustration of how to think about your trading so that you can make money consistently over the long run. Because the most important thing in this game is that you treat it as the long game. We're not trading here for 1 or 2 days or 1 or 2 weeks worth of profit. What you need to be doing is trading so that you can be profitable over 10, 15, 20 years. And so for that, we need to change your thinking to make sure that you're prepared and understand what's likely to happen. So check this out. Here on the screen, you've got the chart, the daily chart of the S&P 500 index. And as you can see, the chart, the week has been absolutely crazy. We've had a couple of really dramatic down days and a whole lot of volatility over the last 3 or 4 days, as at the time that I'm recording this video. Now, what's interesting is there's all sorts of news in the media. There's articles talking about crashes. There's Facebook posts about traders who have blown up and lost millions of dollars and all of that sort of stuff. But check this out. All that's happened is the S&P has dropped by about 10%, as at the time that I'm recording this video. And just 10% is enough to cause the whole financial media to go haywire and apeshit, pardon the expression, because what we've had recently is a really low volatility environment, and people have got used to that. But the fact is, this is pretty normal. It might feel crazy right now, but we have declines and corrections like this very regularly in the financial markets. Doesn't matter what you trade, there's often shocks and unexpected events which cause rapid decreases or corrections in the price of the instruments that you're trading. So that's what's happening on the S&P right now. So let's have a look at the VIX. The VIX, in case you haven't seen it before, is just a measure of the volatility in the American stock market. So the lower the VIX is, the more stable, the more calm, the more confidence there is in the market. And the higher the VIX is, the more uncertainty there is around, and therefore also the more expensive option prices become. So in a really quiet, low VIX environment, the market tends to move very smoothly and steadily. In a correction or a stock market crash or a bear market, the VIX tends to spike and be really high. And so this is what happened this week. So you'd see that from about the 16th of January, for the last couple of weeks of January, it was really, really quiet. I mean, we're talking almost single-digit VIX numbers, which is really, really low if you think about the last 10 or 15 years of what this index has done. But then, in just the space of a couple of days, towards the end of this week, the VIX spiked up to around the level of 50. Yeah, here, just over 50. Which means basically in the space of about 3 days, the VIX went from this low double digits all the way up to 50. So it was a very dramatic expansion in volatility. Now again, if you just take the last couple of weeks, this looks really unusual. But if you think about much longer term, it's not unusual at all, because fear comes to the market really, really quickly. And if you want to profit, and if you want to be consistent at your trading over the long run, over 10, 15, 20 years, you need to be prepared for things like this to happen, because the market changes very suddenly. So are you ready? I mean, have you thought about expansion of volatility, about dramatic changes in market sentiment over a short space of time for your trading? And are you prepared to act consistently and profitably in those environments? What else is happening right now? And there's a lot of talk right now about this Inverse VIX Inverse Volatility Fund that has just blown up. Now, this is crazy. So because we've been in such a low volatility environment for a couple of years now, to be honest, this trade has become really, really popular. The trade is basically shorting volatility. And so there's been ETFs, exchange traded funds, pop up that allow you to short volatility or benefit from declines in volatility. Now, there's this one fund that is basically, if you look over the space of over a period of several months, let's try and zoom out here. Hold on, let me just fix this. Yeah, so let's zoom out here. What you can see is that this fund, Inverse Volatility Fund, has been trending up really slowly and steadily. And this has become a really popular trade because it's, to be honest, it's been easy money. Because we know we've been in a low volatility environment, betting on any small increase in volatility that it will decline back to single digits or back to low levels has been easy money. But look what happened. So there's been so many people in this trade, but in the last couple of weeks, with the volatility expansion, this Inverse Volatility Fund has completely blown up. So it's gone from about high here of about 100 almost 150, and in the space of a couple of days this week, it's gone to basically zero. It's down at 5. Now this fund is going to stop trading. The bank that's listed this fund has announced that it's going to be closed. And so this is the sort of thing that's happening. It's wild volatility out there. And if you'd have looked at this fund just a couple of weeks ago, you'd be thinking this is an amazing trend. What a great opportunity to trade. But look what happened. Now this has hurt a whole bunch of traders, and there's even articles going around on Facebook about this trader in Singapore who lost $4 million in the space of a day because he was highly leveraged in this product. Now that's just crazy, and the reason he lost all his money is because he's broken all of the trading rules in the book. He was over leveraged, he was highly concentrated, he had a trade that had a huge catastrophic risk that he wasn't prepared for and hadn't hedged against. Position sizing was all wrong. So, there was all the classic mistakes. And when you're making all the mistakes in the book in a highly leveraged way and you don't understand the instrument that you're trading, look what can happen. You basically blow up your account in a single trade. And that's what this guy did. So if you saw that article, that's what's happened. Now, there's a lot of talk out there about the crypto market at the moment, cryptocurrencies and Bitcoin and so on. Now, check this out. If in the last month or last couple of months, the Bitcoin price has dropped from almost 20,000 US dollars down to a low of under $6,000, and at the moment it's around 8,000, something like that. Now look, this market is hugely volatile and it changes really, really quickly. So all I'm doing is illustrating the amount of uncertainty that's going on in the market right now. And when you see this, how does this make you feel about your trading and your investment decisions? I know people that have bought Bitcoin at $15,000, $17,000, $20,000 a coin, and now they're watching it ride all the way down. And how do you prepare for this sort of thing? How do you prepare in your trading for this sort of spike in volatility? How do you prepare for a drop in the S&P that happens this quickly and an expansion of volatility that happens this quickly? Are you prepared? Well, for the next couple of minutes, I want to talk to you about 4 steps that I'd like you to take in order to prepare for this type of market condition so that your trading can improve and you can benefit from this knowledge next time this sort of craziness happens in the stock market. So how do you prepare for a week like this in the financial markets? How do you prepare to make sure that you're ready when the volatility spikes, when the market goes into correction mode and does things that you don't expect? Well, the first thing that you need to do is maintain perspective. Now, here's what I mean. This is what's happened on the screen here in the S&P 500 in the last week. But by perspective, when you think about perspective, what I want you to do is zoom all the way out and just have a look at what happens in the market, or what has happened in the market over a long period of time. Now look, we're in the longest bull market in history. And since 2009, the market has performed astronomically well, the US stock market at least. And so, when you put the current correction, which is only down as I'm recording this video, the market's only down about 10% from its peak. Now, when you put that into the context of the entire bull market from 2009 to now, it's actually not that big of a deal. And even over the life of this bull market, you'll see several points in time where there's been a significant, where there's been a correction. I'm not going to say significant because there's only been pretty small pullbacks in this market. Now that's been since 2009. But you also got to think about more broadly what happens in the stock market. Let's go all the way back to 1990. So here you'll see that, yeah, there was a big strong bull market in the 90s, but then in 2000 to 2002, the market went into the dot-com bust, and there was a couple of years where the entire stock market was down heavily over a couple of years. And then there was another bull market where it came up to all-time highs again, ultimately in 2007. And then, as you know, we had the global financial crisis, and the market then got hammered again for the next 12 months. And then that launched the next bull market that we're now in. Now, are we at the end of this bull market? I don't know. It's too early to tell. But, what I want to impress on you is that a correction in the context of a massive bull market like this should be completely expected. If this sort of thing takes you by surprise, then you haven't really thought deeply and long-term enough about the stock market. I mean, if you've only been looking at the stock market over the last couple of years, you could be fooled into thinking that, what's happened now is a catastrophe, it's a disaster, it's a crash. But in fact, it's not. It's just a very minor correction in the grand scheme of things. And it can get much, much worse. I mean, if you were trading in 2008 or in 2001, you would have seen far more dramatic declines in the stock market than what we've had just this week. So, keeping it in perspective, yes, we've had a correction. It's down 10%. It could get much worse, or it might recover and get better. We don't know yet. It's too early to tell. But if you're not ready for big declines like what happened in 2008 and what happened in 2001, then you haven't really thought long-term enough about the stock market. And I would really encourage you to do that. I mean, all of your charts that you study, you should zoom right out and have a look at the sort of behavior that happens in the long run to make sure you're prepared. The VIX is another really great example. And again, we're talking about this low volatility environment that we've been in. And this is, what's been happening over the last almost year or so. It's been really low double digits, and it's even dropped into single digits for the VIX, which is very, very low volatility. And then we had this spike up to 50. Now, again, if you'd only looked at the markets over the last year, you'd be fooled into thinking that what's happened now is abnormal or unusual, or it's an extreme event. But if you have perspective, if you zoom out and have a look at in a much longer term sense what happens in the market, this wouldn't catch you by surprise at all. In fact, you would be expecting it. Check this out. Let's zoom right out on the VIX. Okay, so this chart shows data all the way back to 2000 and late 90s. There we go. So what you can see in the VIX chart, the long-term VIX, is that yes, there's long periods of low volatility, but there's always volatility spikes. Something always happens to spook the market at irregular intervals, and the volatility spikes. So if you're betting with your entire net worth or the house, or in a highly leveraged sense, that the volatility is going to stay low, then you've got to be aware that things like this can happen. I mean, there's volatility spikes at around the 50 level, every couple of years. And in 2008, the VIX went as high as the high 80s. Now, if you were short volatility when that happened, I mean, it would basically blow you up, lose your entire account in a couple of days. And that's what happened to this guy on Facebook or this post that's being shared on Facebook, where this guy in Singapore, lost $4 million overnight because he was betting that volatility would drop, and he was betting on it in a big way. And when volatility spiked, as you can see, it always does, he lost everything. So if you're freaked out, and if your financial results are terrible because volatility has spiked, you need to get a little longer term perspective. Have a look at the chart of the VIX here that we've got, and just realize that at irregular intervals in time, volatility is going to spike. So if you find yourself in a really low volatility environment, that's great. You can make money while that's happening, but just remember that will come to an end, and it will come to an end quickly. So that's perspective on the VIX. Now let's talk about Bitcoin, okay? Cryptocurrencies. Now, this is all the rage right now, and people are talking about Bitcoin going to $100,000, $500,000, $1 million a coin. I don't know if that's going to happen, but by the same token, there's other people who are freaking out because Bitcoin has dropped from 20,000 down to 8, which is a very significant decline, don't get me wrong. But look at where it's come from. I mean, just since 2015, down here, it was at $100 and something a coin, and it hit 20,000. So with that sort of astronomical rise, of course there's going to be some volatility in the trend, and there's going to be big percentage pullbacks. So you've got to realize what is the volatility, what is happening in the instruments that you're trading. And in this instrument, in Bitcoin, when prices has skyrocketed so much by huge, triple and 4-digit percentage gains in the space of a year over the history of Bitcoin, there's going to be some big, harsh, scary declines in the market as the excitement and enthusiasm comes off. People panic, they dump their Bitcoin, and then they eventually it'll stop declining and it'll go on for the next rise. Now again, is the Bitcoin bull market finished? I don't know. It's too early to tell. All I know is right now we're in a massive correction phase, and the market is down well over 50%. It's dropped from almost 20,000 a coin to 8,000 a coin. It could go further. And I see people on Facebook and on chat forums and on groups that talk about cryptocurrencies. I see people talking about, these couple of days and say, look, the correction's over because we've had a couple of big up days. And that's just short-sighted. Again, they've got no perspective. Because, 3 up days, that's great. But you've got to put it into the perspective of the medium-term trend that's happening right now. I mean, this thing's getting hammered. Now, will it come back? Maybe, probably. But right now, it's way too early to tell whether or not it's going to come back. So perspective is the first thing that you need in order to survive things like this. Understand what your markets do, what they could do, and what's the worst thing that could happen. Okay, second thing you've got to do in order to survive markets like this is you've got to avoid emotions creeping into your trading. Now again, I spend a lot of time on Facebook groups that talk about stock trading and trading in general, and what I see over and over again is people panicking. Something unexpected like the decline in the S&P happens, and people are panicking. What should I do? Do I sell? Do I hold? Is it at the bottom yet? These are the sort of questions people are asking. It's probably the same sort of questions we all ask, right? But if you're making decisions based on the emotions that's generating, you're never going to make money. You're never going to profit in the stock market in the long run. And so how do you get around that? How do you get over these emotions and start making decisions objectively and clinically? Well, in order to do that, you need a trading system. A trading system is just a set of rules that guide your decisions in the market. If this and this and this happens, you buy. If this or this happens, you sell. It's not up for debate. You don't have to ask your 1,000 friends on Facebook, should I sell? You don't have to ask the latest cryptocurrency group, is the decline over? You don't have to read your stock tips newsletter and find out if they want you to buy or hold or sell. A trading system guides everything that you do in the market. So if you have a trading system, it takes the emotion out of your trading. So, what that means is you can make money consistently with less stress because the emotions are down. And when the emotions are down, you make intelligent decisions, like following your trading rules, for instance. I mean, that'd be a good rule to follow. So, if you're following a profitable trading system consistently over 5, 10, 15, 20 years, you can make money consistently in the stock market, and you'll be worried less about weeks like this. So, think really, really hard. If you're emotional this week, or if the market is in turmoil and you're stressed and you're struggling and you're worried about your positions, I'd encourage you to think pretty hard about creating your own stock trading system so that you have some rules to guide you when things get hard. It'll make all of the difference in the world. I mean, when I created my first stock trading system, I mean, this is over a decade ago now, I turned on this system and all of a sudden trading just got easy. It was, you wouldn't believe it, because I was spending hours and hours analyzing charts and stressing over my positions and trying to decide how much should I buy of this stock and how much should I sell of that stock and what's going to happen. But when I implemented a trading system, all of that subjectivity went away. And it just allowed me to say, okay, this and this and this happened, so I'll buy that much. And then I hold the position, and when my sell rule got triggered, I'd sell the position. And all of it, trading became easy and it became quick. And the great thing about that, you can make more money in less time with less effort and less stress. And that's what a trading system does for you. And it takes away the emotion and the fear and the anxiety that weeks like this in the stock market cause. So, think very hard. If you're not already trading systematically, I'd encourage you to think really hard about, whether building a trading system or finding a trading system would really help your trading. And I think for the vast majority of people, systematic trading is going to be far more profitable than trying to trade subjectively. Looking at charts and making judgment decisions and taking information from here and there, because, frankly, human beings are just not great traders. You might think you make rational decisions, but, money is an emotional subject. And when your emotions are up, your intelligence is down, and it's very hard to make consistent decisions. So, systematic trading will really make the difference for you if that's the situation you find yourself in. So the third thing that you need to think about or do to make sure that you survive markets like this, volatile markets where there's sudden corrections, is I want you to think really carefully before you take sure thing trades. I mean, like over the last couple of years, or certainly the last 12 months at least, the short volatility trade has been a sure thing. All the little volatility spikes have reverted back to low levels of volatility. The spikes have been really small. And so it's been really profitable. It's just like in a bull market, if you sell put options all the way up the bull market, you make a ton of money, right? And it's consistent because you're taking in premium every month or every week, depending on how long you write how long the expiry on the options is. But what happens to that strategy when the market gets volatile? If the market crashes 30% overnight or in the space of a couple of days, that sort of volatility will cause your strategy to blow up and you could lose your entire account. Do you want that to happen? Do you want to have that risk that one day, an unexpected event could come along and just wipe out your entire trading account? That's, for me, surviving for the long term is my number one priority. Yes, I want to make money. I want to make money this year and I want to make money over the next 5 years. But no matter what happens, the most important thing for me is to stay in the game. And if I lose all of my money, if you lose all of your money, you can't stay in the game. And if you're out of the game, then you've lost. The only way to win is to stay in the game. And so when you take sure thing trades where, it's a very high probability of success, before you do that, think really carefully about what is the worst case scenario, the worst thing that could happen. Because the worst thing that could happen is probably pretty scary. I mean, if you're short volatility and you're shorting volatility at low levels, like low double digits in the VIX, then something pretty scary can happen. Because if the VIX spikes to 50 or 60 or 80, like it did in 2008, that can really wipe you out quickly. And as we saw, as you see in this VIX chart, volatility spikes really, really quickly. So, think really hard before you take sure thing, high probability trades. Make sure you understand the worst case scenario that can happen. The fourth thing is that, I need you to realize that even when things are going well, and in the last, if we just look at the S&P up until the end of 2017 even, the market was just beautiful. It was a strong, smooth trend, very minor pullbacks. And, look, in this sort of environment, a lot of traders fool themselves into thinking that they're geniuses, because they're making a lot of money. And, that's great. You can make a lot of money and you should make a lot of money in these markets. But here's the thing. If you delude yourself into thinking that you're a genius and you start pressing it harder and harder, taking bigger and bigger positions, taking higher and higher leverage, then you're leading yourself down a really dangerous path. Because when the nice market, the low volatility market goes away, like it did in the last week, you will have your highest leverage, your biggest risk, and your highest exposure in the market. and the market comes apart really, really quickly. So when the market is going well for you, when you're making money, it's absolutely critical that you don't get cocky, that you don't push it too hard and fool yourself into thinking that it will last forever, because it never lasts forever. It doesn't matter what it is. It doesn't matter if it's Bitcoins and cryptocurrency. It doesn't matter if it's the bull market that we've had for the last almost decade. I mean, again, you could look at the market, the S&P since 2009, and think, okay, well, 2009, here it is. Wow, we're clearly in a bull market. This is a new normal. The market moves smoothly, it grows consistently, and we only have very minor pullbacks. But if you let yourself believe that, you miss this. You miss the fact that they're actually bear markets. And yeah, look, some of you traders who are new haven't been around for this. But I traded through 2007, 2008, and if you're not prepared for that sort of bear market, if you've deluded yourself into thinking that, the smooth bull market is the normal, then you're going to blow up and lose everything. So maintain perspective. You must, avoid the emotions creeping into your trading. That's the second thing. You do that by having a trading system that you follow. The third thing is you've got to think really carefully about the sure thing trades. Think about what's the worst thing that can happen and make sure that you're prepared for that. And then, finally, is realize that when things are going well, that's not going to last forever, because, eventually the bull market will turn into a bear market. And then again, eventually the bear market will turn into a bull market. So these, it's just the nature of things. In the financial world, it oscillates. And so if you're prepared for that mentally, and if you're prepared for that systematically with your own trading system that you've tested through, many different market types, then you can live to survive no matter what happens. This sort of correction that's happened in the last couple of weeks is, really going to be relatively minor in your trading history. And you're not going to be like that Singaporean trader who blew up and lost $4 million overnight because he was, highly leveraged in the wrong direction when volatility spiked. So the best thing you can learn to really bring all of this together, in my view, is to learn to trade systematically. Now, systematically just means you have rules that tell you when to buy, how much to buy, and when to sell. Basically, objective rules that guide everything you do in the stock market. And when you've got objective rules, the great thing is, you don't have to stress, what's happening with this and what's happening with that, and what does this analyst say, and, what about the company, performance and all of these things. What's happening in the crypto market. You don't have to worry about it, because you've got rules that say if this and this and this happens, you buy. If this or this happens, you sell. And that sort of objective, systematic trading will improve the performance of the vast majority of traders. Because most humans, to be honest, are really bad traders, because we're emotional beasts. And, if you think about yourself, you're probably an emotional being as well. We have to be as part of our humanity. And, because we're emotional beings, it's very hard to make good financial decisions. So the quickest way to get profitable and consistent, and the easiest way to survive in the long run, is to bypass your emotions. And you bypass your emotions by having a system to trade. And that allows you to profit and to make the right decisions no matter what's happening in the market. You could be freaking out because the S&P has dropped 10% and oh my God, the world's coming to an end. But your system tells you to buy or sell, and you just follow those rules. So that's the best thing that you can do to stabilize and make your trading consistent and profitable in the long run. And the great thing about having a trading system is not only will you probably make more money, but you're going to do that with less time, effort, and stress. Less time because it takes about 30 seconds to scan the entire stock market to find the stocks that meet your criteria to either buy or sell when you know how to do it. Less effort because you don't have all of that mental anxiety and thinking and information sourcing and everything, because the system is doing the work for you. And less stress because you're just trusting a system that you've designed and tested for the long run. If you've designed your system properly and you've tested it over 10, 15, 20 years of data, then you know what's going to happen. You've got a very good idea of how the system behaves and what's going to, what sort of results it can give you. Okay, but how can you develop your own trading system? Well, that's exactly what I teach in the Enlightened Stock Trader Certification Program. But, really it comes down to a couple of simple things. You have to find a trading strategy that works for you, something that appeals to your personality. And then you've got to build a set of rules and test those rules to make sure that they're profitable. Now, you'd be surprised how many strategies are written about on websites and in books, and people are trading these strategies and they don't even work because they haven't tested them. And I've tested hundreds and hundreds of strategies over the years, and the vast majority of stuff that you find on the internet and in books and magazines out there, it just doesn't work, at least not consistently. And so you've got to learn how to test your trading system, your trading rules, and make sure that they are profitable over the long term. And then once you've got profitable rules, you've got to design your position sizing, your risk management to help you survive. You've got to strike the balance between not taking so little risk that you don't make any money, but not taking so much risk that when something goes wrong, your account explodes. And balancing that balancing act, how many positions, how big are those positions, that's what keeps you alive and will help you be a profitable and consistent trader with dramatically bigger wealth in 10 or 15 years time. Because position sizing is the key, risk management is the key to survival. Most traders who blow up have missed that step. And then finally, you've got to write your own trading plan, and the plan that guides your decisions. It's not just about the rules in the market, but it's about how will you manage your trading as a business. I mean, you wouldn't dream of starting a business without at least some semblance of a business plan. You have to have thought through what are you going to do, and who are your customers, and how is it, how are you going to make money, and where's the product going to come from, and what price are you going to sell it at. All of those things for a business. Now, for trading, it's a little different. You need to know what your trading rules are, but you also need to know things like your trading infrastructure, like your risk management, like your lifestyle, different triggers in your life that will cause you or should cause you to stop trading or slow down your trading. There's a whole bunch of things that you need to write in your trading plan so that your performance can be profitable and consistent. Even something as simple as what happens if your internet goes down and you need to place a trade. I mean, most traders have not thought about simple stuff that can really screw up your results. So in the Enlightened Stock Trader Certification Program, I take you through step by step everything you need to do to develop and test your own profitable trading strategy, so that when you're finished at the end of the program, you are a confident, independent, and profitable trader. Now, obviously, I can't guarantee profitability, right? No one can do that, and in fact, it'd be illegal to do that. But there's different levels of confidence and certainty. I mean, right now, if you're trading without a system and you're using subjectivity in your trading decisions, chances are you're not going to be profitable in the long run. I'm going to be brutal and honest here, because most subjective, non-systematic traders lose money. But if you develop a trading system that you test over 10 or 20 years of stock market history, and you test it in the right way, which I'm going to show you in the program, you'll have a much higher level of confidence that you're going to be profitable. And that at the end of the program, when you walk away, you're going to be independent, and you're going to have your own system that fits your personality, it fits your objectives, and it fits your lifestyle. And so it will give you the confidence to tackle the markets in weeks like this, because you will have planned for it, and your system knows exactly what it should do, and it'll give you the rules. It'll give you the trades that you need to take, because you've developed it and tested it and designed those rules so that they'll be profitable, and they'll keep you safe no matter what the market is doing. Now, if that sounds like something that you're interested in, if you want to take your trading from, erratic and, all over the place and fear and emotional situations, if you want to eliminate that from your trading, and if you want to get in place a set of rules that you're confident in, if you want to learn how to test those rules and challenge them for robustness and, make sure that the system is stable over a long period of time, then the Enlightened Stock Trader Certification is exactly what you need to improve your trading and develop your trading system. So if that sounds like you, if that's something you're interested in, click the button below and apply for the Enlightened Stock Trader Certification Program. Now on the application page, you're just going to see a couple of real simple questions just so that I can get to know you a little bit more and check whether the program is a good fit for you. Because it's not for everyone. There's different types of traders, there's different skills and different backgrounds. And some trading approaches suit one person but not another. And I don't want to waste your time by trying to teach you a method that's not going to work for you. So just click the button below and fill out the simple application form, and I'll get back to you personally and let you know if the program might be a good fit for you. There's no obligation, there's no cost to apply. Obviously if I invite you into the program, then, we'll talk about the level of investment required. But, right now, the main thing that you need to do is learn how to develop a trading system so that you can improve your trading and make it consistent over the long run. So hit the button below and apply for the Enlightened Stock Trading Certification Program. I'll see you on the other side. I can't wait to work with you and help you stabilize your trading results and help you survive in the financial markets over the long run. I've been doing this 15 years now. I've taken thousands of trades and I've traded on many different markets in all over the world. And what I found is the systematic approach has made all the difference for me, and it will for you too. So hit the button below, apply for the Enlightened Stock Trading Certification Program. I'll see you on the other side. Bye for now.